Hello. Have you ever wondered why big tech companies are suddenly shaking the stock market? Why, despite all the hyper-enthusiasm around AI transformation, major tech giants are walking on paper-thin ice? The mainstream media calls it future investment. They tell you it's a necessary step toward an AI-driven paradise. But when you strip away the flashy marketing and look at the actual numbers, a terrifying reality emerges. Big tech isn't just investing. They are building a mountain of off-balance sheet debt. According to financial investigations, behind the public earnings reports lies a hidden layer of financial engineering. Tech conglomerates are using special purpose vehicles, SPVs, private equity partnerships, and long-term lease agreements to push trillions of dollars of debt off their balance sheets. Why? Because building massive data centers and buying tens of thousands of specialized AI chips costs hundreds of billions, far more than their liquid cash flow can support without spooking Wall Street. The illusion of strength. Investors thought big tech was funding this expansion out of sheer profitability. In reality, it's a high-stakes leverage game, fueled by complex loans and financial leasing. The ROI Nightmare. The real anxiety on Wall Street isn't just the debt, it's the return on investment, ROI. The looming collapse. A single data center requires astronomical amounts of electricity, cooling infrastructure, and constant hardware replacements every few years. Yet the revenue generated from consumer AI tools and subscriptions is a fraction of what's needed to service this debt. We saw this exact pattern during the 2000 dot-com crash, when telecom companies buried themselves under mountain-high debt, laying fiber optic cables that generated no immediate revenue. Today, we are watching the exact same script replay on a far bigger scale. This raises the critical question: if the business model doesn't make sense, why are they risking complete corporate insolvency? Why are they willing to burn through trillions in debt for data centers that don't pay for themselves? Because this isn't just about commercial software or selling monthly subscriptions. It's about building the physical infrastructure for a total control system, the surveillance grid. To track the real-time movements, financial transactions, biometrics, and digital footprints of billions of people, you need an unprecedented level of raw processing power and energy. The digital framework. Total financial and social control relies on a seamless digital infrastructure. When paper currency vanishes and gives way to central bank digital currencies, CBDCs and mandatory digital IDs, the AI algorithms running inside these data centers will become the gatekeepers of economic participation. Here is the most sobering realization. A financial crash or economic depression isn't a failure of their plan. It may very well be the intended outcome. The bubble bursts. Unsustainable debt destabilizes the financial system, wiping out retail investors and middle-class wealth. The panic phase. As economic panic grips society, millions are left scrambling for survival. The solution arrives. At the height of the crisis, the pre-built AI infrastructure and CBDC framework are introduced as the only safe solution. A managed system of digital welfare and total surveillance, where access to basic needs is contingent on compliance. Most everyday citizens who have over half of their wealth tied up in fragile financial markets have no idea this infrastructure is being built right beneath their feet, financed by the very system threatening to consume them. The warnings are no longer far off in the distant future. The signs are right in front of us, wired into every massive server hall being constructed today. We need to wake up, look past the corporate hype, and see this system for what it truly is. If you found this message important, please share this video with those who need to hear it. Don't forget to like, subscribe, and hit the notification bell to support the channel and stay informed. Thank you for watching.